Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, September 12th, the year 2019. Let's talk trading. Range Matters, Part 3. It's all about range, price ranges. Has to range. Sometimes it ranges a little, sometimes it ranges a lot. We're going to take a look at that. And because price ranges, and if it ranges against your position, you better have your stop in place, because you do not want to lose more money on any one trade than you're willing to lose per trade. This is something that you decide for yourself. I saw somebody was asking about Dragon money management, and Dragon risked up to 5%. He had a very aggressive strategy. I've seen other people say don't risk more than 0.5%. And you have to think it depends on, whether or not you're trading, dollars, tens of dollars, hundreds of dollars, thousands, millions, billions. How much do you want to risk per trade? Is it a percent, or is it just a one fixed dollar amount? In fact, I read on one of those Forex trading groups, some guy blew up his $150 account. Obviously, he was trading pretty aggressively. I don't think he had his position size properly. And for those just tuning in, all gaps filled this week, especially the dollar yen here. We see we had opened below the close, shot right up through it, shot through the previous week's high, and look at this nice range here. In fact, today we've got a range of 140. So obviously something's going on. And we're only 167 pips away from the yearly open. Looks like we're about to cover a missed pivot, but we've got a few down below too. And wait a minute. Oh, that was the weekly range back here. Weekly range 140, not daily. Daily right now is only 65 pips. And if you're wondering, if you add those up, you see 64, and that says 65. It rounds it, as you can see here. And these are also rounded. So see right there, it went from 21 to 20. There you go, rounding. And we've got 1, 2, 3, 4, 5, 6, 7 pairs over 100 in the daily range. As I showed you yesterday, we were looking at the frequency distributions here and how you use these to determine a few things. We see here where price is in the wick zone. See right here, it opened near that wick zone. Every open is near a wick zone, because the close and open are usually within a pip or two during the week. Over the weekend is where you get that gap. So you see here, price had to range. And it ranged right out of there, both directions. And as you can see here, we've had a lot of action this hour. I'm not sure why, to tell you the truth. But looks like price moved down, price moved up, price came back. And you see, we know the daily range average is 64. And we can see right here, for it to be greater than 50, it happens about 61% of the time. So we have the buy zone. The buy zone right here is these 20 pips, 10, open plus 10, open minus 10. You start here. It has to range 60. So if it goes up 30 and down 30, it can't stay within. If it goes up 60, it can't stay within. If it just goes down 60, it can't stay within. Now it could go, so if we have 60 average range, it's obvious that price has to move outside of the buy zone. That's why when people ask me what system should they trade, I say, well, try the buy zone, because that is, you can see it's breaking out, but it's a little breakout. Either it breaks and it's breaking away from the open. So you're always trading away from the open. Or I say trade the wick zone, because let's just say price only went up here. So, and if the previous day was green, which it was in the wick zone up here. Then it reversed out and it would start, okay. Or it came out here. We'll have to look at the wick zone. Whoops. A weird click. Oh, and by the way, people, traders, remember, these videos are for educational purposes only, and your results may differ from mine. And that Forex trading, like all trading, is very risky. You can lose your money. So, if you're seeking financial advice, seek it from an accredited financial professional rather than some Yahoo talking on YouTube. Because that way, when you lose your money, you know it was lost by a professional. You should feel much better about that than if you lose it listening to some Yahoo off of YouTube, right? Makes a lot of sense, doesn't it? And here we have an open less than previous high. We have a high greater than previous high, but we're not closed, and the close is above the previous high. So you see, close greater than previous high, it's 41% out of the times when the high is greater than the previous high. So we had 19 occurrences out of those 46. So that means don't be too greedy. If price starts reversing on you, just take your money off the table. You'll get a chance to trade again. You always do, right? Oh, we have some buy zone action, or I'm sorry, some rat zone action. So you see here, we put in a top, we put in a bottom. We have nice movement here. And somebody was asking, when's the best time to trade? And I wasn't really sure what they meant by the best time to trade. But what I told them was just wait for a green H1 candle. Okay, if you're down here. So you see here, this put in, you just wait, price came back down, you turned green, and there was money to be made. And here, once again, on the range, we're looking at H4, and price, if it opens between two lines, it's not going to stay between those two lines over those 4 hours. It just very, very, very rare occasion. You know, it might leave and return, but that's the whole point. It's going to leave. When it leaves, there's the opportunity. And if you had gone long here, you would have stopped out. Then you come back and go short. If you would have gone long here, maybe you would have stopped out. If you went short here, you maybe picked up a pip or two. So sometimes you just pick up a little, sometimes you pick up more on this particular pair. Once again, range, as you can see, timing is everything. When I open this trading profile here, it hit here and went all the way up there. Oh, I couldn't have picked a better time, right? Now, somebody was asking me about an indicator, and I guess I should have shown you guys, you fellow traders, these indicators. The one that puts the first day of the week and all is called TRO 2019 first day, and that's a donational indicator here, and it shows you the week, month, and year, that first day, trading day of the week, of the month, of the year. Now, if you think about it, this is what I really want you to think about. Think about the yearly range. First day of the year, price has to move out of it, right? First day of the month, think about the monthly range. price has to move out of that first day, unless those first days are huge days, okay? And ditto for the week. That first day of the week, price has to move out of that range. So that's one of the reasons why we look at them, okay? Now, on the ATR lines, somebody else wanted to know what settings I have. I basically have I use the default. Okay, we start with ATR 2, we go up to ATR 14, and what happens is the indicator, the program, the code loops around. It says, okay, what's ATR 2? What's ATR 3? Okay, the first two, you're going to have a min and a max. It comes up, ATR 4, is it bigger or less than? If it is, it replaces it. So maybe ATR 4 is less than the other two, so ATR 2 is the minimum. It goes all the way up to 14. In this period, I know I need to update the indicator, and so you can have the drop-down menu, the 1 minute, 1 day, etc. This is the weekly period, okay? And that's it. And the ATR multiplier, that's where it says here, daily open minus half of ATR 14, daily open minus half of ATR 3, okay? And then you have the actual ATR 14 is here. Where's ATR 3? Good question. It must be here somewhere. Here's the daily open plus ATR 3. Daily open plus ATR 3 is here. Oh yeah. And here's daily open minus ATR 3, daily open. So you can see here, that's your daily ATR range. And notice here for today, we hit the daily open plus the minimum, plus half the minimum, and plus half the maximum. So you see here, it hit these. These are good places where you can take off some of the profit, or you can reverse, or if you're looking for a rat reverse, you can look here. I prefer to look for my reversals on when it really hits the actual ATR zones. But you can see this is the weekly ATR, the upper, okay? And then here's the lower. So for the week, this is the opening range for that first day right here. And you see we shaded it the whole way across. And then it came out here on Tuesday, came back out here, and then it's just continued up, looking to go to the weekly ATR. Now, weekly range is 140, so it's already hit its average. Now, we can come back here, and I hope I have enough time so we can do this. Where is it? Where is that? One chart. Okay, we can, oh, I've got it right here. We can change it to frequency. Okay, the range, as you can see, 88% of the time it's greater than 100. Okay, so for the weekly, you'd have to go into the indicator. Oh yeah, I need to show you these indicators too. The list. See, I've got 4 different years of indicators here. But you can get this one, the free range one that I showed you was just looking at there. So now you know what indicators are here, and you can see 88% of the time it's going to be 100 or above. Where were we? We were here. Okay, these indicators, these are the freebies that the TRO range gauge right here. So I've got it loaded twice, once for daily, once for weekly. But knowing that price has to move outside that range, that's how you can take these trades, okay, with confidence, knowing the percentages. Now, and you see here, it's got close to that weekly range, then you can start looking for reversals. Okay, fellow traders, I am running out of time. So just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks, and don't forget to subscribe.